This podcast is intended for investment professionals only. All investing involves risk. What is a money market fund? Why do investors use them? And how might the path of interest rates, technological change, and evolving regulation affect the outlook for these funds? I'm Harry, a content manager in L&G's asset management business, and today I'm talking to Ross McDonald, a liquidity investment specialist at L&G, to learn more about this sometimes overlooked but crucial part of the investor's toolkit. Welcome to the podcast, Ross. Let's start right at the beginning. What exactly is a money market fund?
Hi, Harry. Thanks for having me on today. Delighted to be here. A money market fund is an investment fund that invests in very short-dated, high-quality assets. The objectives are to maintain capital, provide liquidity, and return investors a yield. That's kind of a third objective of the money market fund strategy. While they're not risk-free, money market funds are typically viewed as being one of the lowest risk investment funds available and have their own regulation that require minimum liquidity, diversification, and maximum credit and interest rate risks. They're often AAA rated by one or more rating agency and typically offer a same-day access to cash for investors. In our portfolios, we limit investments to the highest quality banks and counterparties and have a rigorous investment process which aims to reduce risk.
And within our own organisation, where do money market funds sit? Are we talking about one team that runs these funds in isolation, or do you draw on the expertise of others within L&G?
Yeah, so they sit in our asset management division. The money market funds are within the global trading and liquidity management team. The team consists of about 40 investment professionals across 3 activities, so trade execution, securities lending, and then cash management. So the money market funds sit within that cash management leg, and bringing together the 3 sort of market-facing activities under one team allows us to deliver the benefits of our scale to our customers as an asset manager with over 1 trillion of assets under management. The team focuses on delivering better outcomes for clients through managing and leveraging our counterparty relationships, strengthening investment and trading processes in partnership with technology teams, and driving technology innovation. And of course, from a liquidity investment perspective, the money market team benefit from the wider investment platform within L&G, drawing on the expertise of our colleagues, particularly in the global fixed income and research teams.
Okay, and turning now to the second of the questions I asked in my intro, how do investors use money market funds? And is it only a particular type of investor who might look to these funds, or are they relevant for a whole spectrum of different investors?
Yeah, it's a good question. Yeah, so money market funds are used by a wide range of investors, from retail investors to the most sophisticated of institutional investors. Those can include corporate treasurers, charities, universities, even sovereign wealth funds and large global financial institutions. They can either be used as a standalone cash management solution or as part of a wider toolkit. Investors place their subscriptions redemptions on the day and the cash settles shortly after. So if you place your redemption, say at 9 o'clock this morning, you'll get your cash shortly after rather than having to wait till the end of the day. Investors can either access funds directly by instructing the transfer agent by telephone, fax, or email, or they can trade electronically via a platform or a bank sweep that can be set to automatically move cash out of your bank account, maintaining a stable or a consistent balance within your bank account. And we've seen actually over the course of the last few years with the COVID pandemic accelerating the move towards electronic trading, where it was more challenging to get a hold of physical signatures when people were remote working, a growth in the number of clients and trades that come through electronic avenues. I guess the whole purpose is trying to make it as simple as possible for our cash investors.
You touched on the COVID pandemic there, which raises the interesting question of how external events of all different kinds might affect money market funds. We saw a big rise in interest rates, of course, in the years after the pandemic. How did this affect appetite for money market funds?
Yeah, the increase in interest rates in 2022 to 2023 really brought money market funds back into view for investors. Due to their short-dated nature, professional active management, they typically pass through any increase in interest rates quite quickly. That contrasts with banks, who can sometimes be incentivized to raise rates more slowly and then decrease them more quickly as we start seeing interest rates fall. It's often described as taking the escalator up and then the elevator back down. And in a falling rate environment, money market funds can extend their maturity profile to lock in a slightly higher yield and typically outperform other cash management options. There's been lots of money flowing into money market funds globally for the last couple of years, very competitive rates on cash. Both European and US domiciled funds are up about 50% in assets under management since the beginning of the hiking cycle.
Fast forwarding to today, we're now in a very different phase of the interest rate cycle. Do money market funds have any ways of defending their yields when interest rates start to fall back down again?
Yeah, absolutely. So you're right. Central banks have started cutting rates and they're more expected. Markets obviously very volatile with the news flow at the moment. So we'll have to wait and see how those things play out. But yes, they can. So money market funds can try and navigate that landscape. And it's really all about being sensible when making sort of maturity duration decisions within the portfolio. We can extend our maturity profile slightly to try and hold on to a higher yield for longer. As I say, market volatility, we've seen a few instances recently, COVID pandemic, we had the UK mini budget, the US regional banking crisis. These are all in quite quick succession. The kind of current US trade tariff noise that we're seeing. And each of these has really reiterated the need to have sufficient liquidity on hand to meet any cash requirements during these periods of volatility. Money market funds have typically tended to perform really well in a crisis. We believe it's a good place to consider keeping some of your cash allocation.
I also mentioned in my introduction regulation as one factor that could shape the outlook for these funds. What legal changes have we seen in recent years, and what were these changes seeking to achieve for investors?
Yeah, there's potential for further regulatory change. I guess following the financial crisis, there were changes to money market funds across the different jurisdictions, US, Europe, and further abroad. Following COVID-19, there was a bit more discussion around potential changes to the regulations that came in last time around. The US have fully implemented their changes, increasing liquidity requirements, adding liquidity fees, and removing gates from certain funds, which were a driver for large redemptions during the pandemic. The UK consulted last year and are yet to make a final decision on the changes. In the European Union, we're waiting further information at the moment. We're expecting potentially towards the end of this year, they could come out with some potential changes, but it's certainly somewhere to continue to watch.
So, if an investor is deciding which money market fund might be most suitable for them, what are some of the features that they might want to consider?
Yeah, great question. So investors, as always, they should conduct their own due diligence when looking at money market funds. There can sometimes be a misconception that all money market funds are the same, but really it's worth kind of getting under the hood and doing your own research. We believe that risk management, investment track records, and external credit ratings are also all worth taking into consideration. It's also worth thinking about how easy it is to access the fund, the ability to get in and out quickly, and implement that in your existing workflows and processes. As I said there before, there's been quite a lot of development in the electronic trading and digital space. Some money market funds now even being offered in a tokenized format, which could actually unlock additional utility to end investors.
I'm not sure I've heard of tokenized funds before. Can you give us a simple explanation of what they are and how they work?
Yes, I'll try. It's certainly very technical, but I suppose in a nutshell, it's recording ownership of the fund using blockchain technology. And the main benefits that includes is an even faster way to transact, maybe with even instantaneous settlement, the potential to reduce risk further, and even maybe add new utility to the product. Could be used as a means of payment to settle margin or collateral requirements going forward. So it's a very exciting space, lots happening. As I say, probably quite early days still, but certainly something for investors to keep an eye on.
Ross, thanks so much for talking to me today. If you've enjoyed today's conversation, do keep an eye out on our blog, which you'll find at blog.lng.com, where you'll find more insights on this topic in the months ahead. Thanks very much for listening. As a reminder, this podcast is intended for investment professionals only and shouldn't be shared with a non-professional audience. The views expressed in this podcast are those of L&G's Asset Management Division, as at the date of publication. This podcast is for informational purposes only, and we're not soliciting any action based on it. The information discusses general market, economic, or political issues, or industry or sector trends. It does not constitute research or investment, legal, or tax advice. It is not recommendation or advertisement to buy or sell securities or pursue a particular investment strategy. Assumptions, opinions, and estimates are provided for illustrative purposes only. There is no guarantee that any forecast made will come to pass. No party shall have any right of action against L&G in relation to the accuracy or completeness of the information contained in this podcast. Where this podcast contains third-party information, the accuracy or completeness of such information cannot be guaranteed, and we accept no responsibility or liability in respect of such information, not for distribution to any person in any jurisdiction where such distribution would be contrary to local law or regulations. Copyright 2025. Legal and General Investment Management Limited is authorised and regulated by the Financial Conduct Authority. Unless otherwise stated, references herein to L&G, we, and us are meant to capture the global conglomerate that includes, in the European Economic Area, LGIM Managers Europe Limited, authorised and regulated by the Central Bank of Ireland as a UCITS management company pursuant to European Communities Undertaking for Collective Investment in Transferable Securities Regulations 2011 as amended, and as an alternative investment fund manager pursuant to the European Union Alternative Investment Fund Managers Regulations 2013 as amended. In the USA, Legal and General Investment Management America, Inc., a US SEC regulated investment advisor. In Japan, Legal and General Investment Management Japan (KK), a Japan FSA registered investment management company. In Hong Kong, issued by Legal and General Investment Management Asia Limited, which is licensed by the Securities and Futures Commission. And in Singapore, issued by LGIM Singapore Pte Limited, company registration number 2022318776W, which is regulated by the Monetary Authority of Singapore. For full terms and conditions, please visit our website. To find more content, you can check us out on LinkedIn or on our website.